Hey, good morning, everyone. Good morning to our valued lead investors. We welcome you to another edition of our equities market review, and we also look at the fixed income market. We appreciate you for following up with all our various programs across various platforms. So this morning, we'll still look at the equities market as a tradition, and then we also look at the scorecard for bank capitalization, our recommendation, and then what are the expectations we have for the week, and what action should we be taking as valued investors. This is the last month of the 2024. Today is the second day of December 2024. So we are closing the year, and all along we've seen some improvement in our equities market. So if you look at this graph, out of the 5 trading days, because of the MPC committee that met last week, which happens to be the last meeting for the year 2024. So on Monday, we could see some improved level of activities in equities market, and even Tuesday, of course, was lower. But on Wednesday, market reacted to the decision of the MPC. Of course, everybody wants to take caution about some of the policy that is also coming from the monetary authority. So on Wednesday, market was down. We also saw some improvements on Thursday, and on Friday, the market also closed bearish on Friday. So week on week, market loss minus 0.33%, largely because of the profit takings we've seen in some of the takers under key sector or major indices in our market. In terms of the trade turnover, last week we had substantial activities in terms of the turnover, that's volume. We had 3.1.9 billion, which was higher than the previous volume we had in the last week, about 1.95 billion, by almost 3.5%. While in terms of volume, we also had 54.85%. This is to tell us that investors are also taking position because this is the month every portfolio managers, asset managers will also balance their portfolio. So are likely to see more of improved activities in terms of volume and in terms of value in our market. So last week, the all-share index moderated to 97,506.87 basis points. So our year-to-date return was still lower because of the depreciation or depletion we've seen in all-share index. That currently stood at 30.40%. But in terms of the performance, we've seen major activities being driven by the financial service industry, driving or contributing to about 47.25%. That is to attest to the fact that we've seen some tickers under banking or financial sector coming out stronger with a better performance. These are listed companies that have top lead capital recommendation based on various key metrics guiding investors' position or investor taking action in some of those tickers. So in terms of major activities in the market, last week we see the newly listed company MC Call FBN Holdings, Japan Gold, accounted for about 1.5 billion shares, worth 19.80 billion. And in terms of contribution, those three companies also contributed 49.69% to the equities volume, and then to the value about 36.09%. So it's to also tell us that that newly listed company that came into the market about 2 weeks ago, that's the beauty of when companies also listed, and they're also coming up with under a new sector, that's they're into real estate. We didn't really have much companies listed under the real estate, so it's also good that that company is also coming up. But in terms of performance across sectors under lead capital coverage, 2 sectors closed positive, while 3 also lost. Only Angels Insurance and the Angels Insurance Industrial, because we've seen key or more bad interest in insurance company, because the result we have also seen across board are also very encouraging. Even some of those insurance companies we have seen as companies that we call them penny stock, they are no more penny stock, because results usually reprise companies when they're also coming stronger. We've seen some of the insurance companies 9-month result, while some 6-month results, some having EPS to the tune of having almost 30% or 35% of the current market price. So it's to tell us that investors will continue to take advantage of tickers that have come out with good performance. So that was the reason why we have seen improved buy interest in under insurance sector, and then the same thing in industrial. That is to the Lafarge. People are still buying Lafarge, and some news also came into the market during the weekend that there is a particular investor that is also planning to take over or take a more of a compulsory take over a particular stake, about almost 83.3% of Lafarge shareholding. That is also going to drive the market today. So that's just a brief overview of our markets. And in terms of our capital recapitalization, the First Bank is still open. It's closing on 12th of this month. You can see again that the price at the right price is still lower than the last group price of 26.30 kobo. We are still encouraging all our valued customers to take advantage of that rights issue, because some of the important information we need to present to you in terms of profit after tax, earnings per share, earnings use, that will guide your investing decision. We have also included this, and then we are also encouraging all our valued customers to fill their form and submit their applications to our customer service. The UBA will continue to encourage people to leverage on the current market price, which is about 32 naira 70 kobo, and that is almost a discount of 6 naira 57 kobo. So let's also take advantage of that. We encourage you to buy from the market. If you have the cash flow, fill your form, also submit the UBA. We've also seen that UBA also did very well in terms of being the first bank that would declare, apart from the Stanbic IBTC, among the FUGAs, that would declare 2 naira as interim dividends. And for them to have declared 2 naira as interim dividends, it means the final year of 2024 is going to look promising. They will do more than what they did in the interim performance. So we encourage people to take advantage of some of those good entry prices we have seen in our market. So we've always explaining and giving more insight into the performance of the companies we have seen for the 9 months. We are also including this slide so that every point in time, investors can also take advantage and take just run through or take a glance of the performance of some of those tickers. The Access Bank, Stanbic IBTC, UBA, and Zenith Bank, they've also formed part of our recommendation. We've also showcased oil and gas, corn oil, Dangote cement, and other sectors, so that at every point in time, you can also look at it and then you have an idea of what is also happening, whether those recommendations are justified by the performance of some of these tickers, either their half year or their 9-month results. So in terms of these are the results across board: insurance, telecom, and then even agri. But in terms of expectations for the week, so that we can also touch other areas, last week we saw some profit taking because of anticipation that the MPR monetary policy of central bank, they're likely to increase the MPR, but people were not sure whether about almost 1%. But Lead Capital, we had projected in the 2 strategy sections we had with all our value customers that they cannot increase more than 50 basis points. We are looking at between 25 and 50 basis points. They're also being careful. Is to tell us that equities market will continue to enjoy more patronage, because the increment in the MPR was just about 25 basis points. That may not really draw much fund or liquidity away from the equities market. So week on week, we expect some level of improved buy interest in some tickers with good entry price to drive the market positively. We've seen results coming out. So, and then companies are also running up their results. Portfolio managers, it's the time they also need to realign their portfolio and ensure that tickers with good performance in the half year and the 9 months constitutes the major asset classification of their investment. So you are likely to see that happening. So if you have not been taking advantage of some of those good entry price in the market, this is the time you need to wake up and ensure that you also have good companies that usually declare good dividends for the year 2024. Because the more we close to the AGM or to the board meetings of some of those companies, the more it becomes difficult to buy some of those stocks, because everybody wants to be part of the winning team. So this is the time you need to take advantage of those prices. They are still very cheap, looking at it from the perspective of a fundamental analysis. So let's take advantage of that. So we do not expect significant fund movement for the equities market due to the marginal hike in the interest rate. 25 basis points, though, is something, but that may not really affect equities market significantly. So we expect that some people will still remain in the equities market and continue taking advantage of the good entry price. Aside that, towards the end of the year, we expect investors to realign their portfolio, which will almost certainly lead to the buy interest and sell interest. You see position taking, you see activities across various sectors. But more importantly, investors will ensure that in realigning their portfolio, good company with good fundamental constitutes major part of their portfolio, and that will be driven by the 9-month performance. And then that is what is going to tell us what the year 2024 is going to look like. That's likely to happen. So week on week, of course, a TB auction is going to take place this week, about almost 500 billion size. But we expect that week on week, the buy interest in the equities market will still outweigh the sell interest. And then ASI is likely to close on a positive note, but it's going to be slightly. So there's tendency for the bull to take over the market at the end of the week, but just slightly. So thank you. We'll go through the fixed income presentation, and then thereafter we entertain questions. Thank you.
Okay, good morning, everyone. And very quickly, we'll run through activities at the fixed income market. For last week, in line with projections, considering that we were not expecting any major outflow from the system, we saw some moderations in the funding rates as system liquidity eased. We saw at last week, we had reported system liquidity to have closed at about negative 1.5 trillion. But we saw last week it eased to about roughly around 400 billion. So we saw that also have effect on the funding rates as the open buyback rates are declined to 29.25%, and the overnight rate declined to 29.91%. The liquidity in the market last week actually triggered most of the sentiment across both markets. As we saw in the Treasury bills market, the market closed bearish. We significantly saw sell-offs, majorly by banks, because I think most of the critical players in the market are actually most of those banks and the high capitalized financial institutions. So we saw some of them put up their holdings on sale following the level where the last NTB auction closed. We saw that the rates had declined. So most of the banks had to take profit, one, and then secondly, to raise capital to ease their liquidity needs. So as a result of that, we saw that yields declined significantly by a whopping 113 basis points to close the week at 25.16%. And another major factor that also fueled the sell-offs to witness last week was that banks are beginning to position ahead for this week's auction that will be taking place on Wednesday. Like my colleague had rightly said earlier, there's another NTB auction holding this week where 583 billion worth of Nigerian Treasury bills will be on offer. And we expect that the rates would still remain elevated at the levels we saw them close at the last auction. Just to recap or to refresh our mind on the last result where the auction closed, we didn't see much movement on the 91-day and the 182-day, but on the 364-day bill, we saw a 50 basis point increase in the stop rates. So we expect that at the auction holding next tomorrow, we would see stop rates over around the current levels where they are. And for the bonds market, like I said at the beginning, liquidity actually triggered most of the activities. We also saw that the bonds market closed on a bearish note as our system liquidity fueled sell-offs as well. Most of the players had to sell off some of their holdings where they are made gains, largely to raise liquidity in the market, which was some of the reasons. Which was part of what improved liquidity in the system to about I think 57 billion at the close of the week. And for the curves, we saw that most of the activities were skewed largely towards the long end of the curve, as that's where I think most of the bond holders at this point are currently in profits, because we've seen that year on year. Okay, I think we don't have the slide that showed that year on year. We would see that where the yields at the beginning of the year opened and where they are currently, particularly on the long end, most holders at that end had made significant profit. So we saw most of them put up their position for sales. So as a result of that, at the short end of the curve, we only saw a marginal increase in yields of 3 basis points, while for the mid to the long end, we saw that yields increased by 9 basis points. What does this technically imply to us is that Activities last week were not really focused on the short end, and that wasn't quite surprising because there's another auction coming up this week. So most people are just kind of waiting to see what the Treasury bills auction would do. So they focus most of their actions on the long end of the curve. The maturities that we saw some significant trades on, we saw some 26 were traded, some 29s, 33s, and also we saw some 34s that were traded last week. But however, at the end of the week, across the entire curve, yields increased by 6 basis points to close at 19.46%. As the graph illustrated, it's just as the graph depletes rather, it's just to show us the movement on yields across the various maturities week on week. For the foreign exchange market, at the official window, Naira suffered a major hit as it's lost roughly about 20 Naira and 7 kobo to close the week at 1,672 Naira, 69 kobo. It still emphasizes our bias towards the instability we currently have in the foreign exchange market. And we hope that with time, we would see some level of stability where volatility on that side of the market will be very, very minimal or even non-existent. But for the forward contracts, we saw that Naira improved across the various contracts from the 1 month to the 1 year. And that's largely due to some signals that we currently have. Nigeria is to issue another Eurobond by I think this month, maybe 15th or so. So investors are projected that maybe over time, we should see Naira improve as we should see significant subscription on that end of the market. So all those were some of the major activities we saw at the market last week. But for this week, the major activities we expect are number one, the Treasury bills auction. We also expect some coupon inflows into the market. Albeit, we still see system liquidity being on the negative zone, considering that close to 600 billion worth of Nigerian Treasury bills is on offer. So that would still maintain or that will still keep the funding rates at the levels where they currently are. The bond market is expected to also trade in line with liquidity in the market. While for the Treasury bills auction, we see the market trading on a quiet note as participants would wait to see what the primary market auction holding on Wednesday would close at. And all these activities, like my colleague has rightly emphasized, this is the end of the year. We expect to see some critical actions being taken place by investors and the markets. And now is the best time for any rational investor, rational in the sense that you're looking at positioning to make some significant gains in the market. Now is the best time, to position. And where you think that funds or fund size rather is a major constraint for you, the various products that lead asset management or lead capital offers, they've been thoroughly curated to provide opportunities for clients to also take advantage of the happenings in the market. From our lead fixed income fund, a fixed income fund which currently has a yield of about 18%. That's quite impressive when you check that across the market and what other funds offers. And if you look at the FGN savings bond, I think the average rate on that has an 18%. For a fund for an asset that you would have to hold for 3 years, offering you 18%, and for a fund that has just a minimum holding period of 90 days, I think anyone would want to opt for the funds, as you know that after 90 days, you have access to your money rather than locking in your funds for a whopping 2 or 3 years. So, and then for the balance fund, the equities market is projected to close the year on a strong note and also to open the year 2025 on a strong note as well. So we expect that these are the areas where any rational investor should be looking at now. The lead balance fund has a mix of both the equities and fixed income instruments, and that gives you just a perfect opportunity to key into the various dividends that both markets provide at the moment. For the lead dollar fund, a dollar-based fund where with as low as $1,000, you can get to invest in the fund And largely, number one, the fund helps you to hedge against the volatility in the naira, as you can see from the previous slides. And also your income and your dividends are paid to you in dollars. So you get to preserve your funds while also diversifying your portfolio from a naira-based from naira-based instruments. And for the other funds, the Gazelle portfolio is a fixed income product where you get to lock in your funds for a minimum of 90 days and for as high as 365 days. The rates the fund or the products offers to clients is actually quite competitive when you look at what you would randomly get from your normal commercial banks. You can't compare that with what this fund offers or this product offers. And for Eurobond trading, now the end of the year, you would see some key activities take place rather. A new government is expected to come on board in the US by next year. Some of those critical activities will obviously improve the value of the dollar rather. And now is the best time to also diversify and look at products whereby you can also get to invest your FX flows. So these are some of the various products that we have, and many other products. If you have interest in any of them, or you have inquiries about any of the products that we've just showcased to you, our lines are always open. Our customer service will be there to provide guidance, clarity where necessary. With this, we've come to the end of the presentation. If there are questions, if there are clarifications that are required, we would take them now.
Okay, thank you very much. So for our stock recommendation, it has been sent out, but if you look at it, we have extracted about 37 lists of companies to form buy, hold, and sell. So 1 to 26 is our buy recommendation, and where we have also looked at the upside potentials that will also guide you whether you want to take profits of some of those tickers. 1 to 26 is our buy, 27 to 34 is our hold, while 35, Conroy, Geregu, and Transcorp Hotel, we are putting them on sell because they are far below our target price because of the valuation. So now the Conroy, Geregu, and Transcorp Hotel, they form part of our sell recommendations for the week. As we see corporate actions or information coming into the markets that will guide our decision as regards replacing some of those rating. Of course, we will do that. But if you check your mail, we have sent out our weekly stock recommendation that cut across various asset classes, stickers in our market. So thank you. It's time for question and answer. Okay, somebody say, kindly share the slide. I have to go now. Thank you. We'll send it to you. You'll get it before noon. You'll get the slide. So, but however, if you check your email, we've sent out our recommendation. At least that can guide your investing decision this morning as soon as the market opens. Okay, somebody is asking, what is the equities market outlook for 2025? We expect stronger market activity in 2025 because there are several factors that will determine that. Inflation and FX, the foreign exchange market will also determine that. But what we expect in 2025, we expect some moderation in inflation. Of course, we've seen central bank increasing interest rate MPR. They've done that like almost 6 times. So before you begin to see the effect of that decision being activated by central bank, we are likely to see that in the first quarter of 2025. But by and large, foreign exchange market is also very stable. Of course, naira to dollar is still very high, but we've seen some transparency in the FX market. And then when there's a transparency in the FX market, it's going to attract a foreign portfolio investor into our market. So 2025, we should also expect new listing. We've seen that companies are also coming to list their equities because the fixed income investor and the domestic participation from that 4.47 trillion accounted for almost 90%, driven by institutional investor and some level of activity from the domestic investors, retail investor. So we expect companies' performance to also encourage more institutional and retail investor by 2025. So equities market is going to look stronger in 2025. So we encourage people to buy based on fundamental analysis. And then companies will be able to make more money, and then you get better dividends. It's costly for the business to survive in an environment with elevated interest rates, and they're also planning to ensure that they also drive a risk sector. So on that note, equities market will receive some high level of fund flow in 2025. Okay, what is the short to medium term outlook for equities markets? I think I've talked about it. The 2025 is going to cover that. We expect good performance. The result we have seen in the Q3 of 2024 has shown that companies are now looking elsewhere to ensure that some of those headwinds that impact on their top and the bottom line, they've been able to find a way around that. That will continue in 2025. And equities market is going to record more patronage. How is federal government borrowing strategy affecting fixed income market, particularly in terms of yield curve?
Okay, so as we keep, I guess we didn't capture that very slide, but from our previous slide, we've always showcased the movement of yields year on year and where we are at the moment. So we've seen that most of the activities of the federal government in the last 6, 7, 8, 9 months has been skewed largely towards the short and the medium term of the curve, and which is why we currently have an abnormal yield curve. Ideally, a normal yield curve should slope upward, should have a northward slope. But now we can see that the yield curve is currently indirect of what a normal yield curve should be. And that's simply because we can see that most of the activities are skewed towards the short end of the curve. And that's quite intentional on the part of the federal government, considering that the inflation currently is still quite high. So they're trying to restrict their borrowing plans towards the short and the medium term. But by the time we see things start to moderate and then probably the MPR starts to decline, we would see them move back to the medium to the long end of the curve as it should ideally be. So for now, we should still continue to see the abnormal yield curve we currently have, as we expect that the FGN borrowing plans will still remain at the short end. And if you look at the budget for 2025, the projected deficit is roughly in excess of 20 trillion. With total budget about 47 trillion, I think revenue is slightly above 22 trillion. So that means we have a deficit of over 20 trillion. So that's to tell us that next year, the federal government will be heavily involved in the capital markets, and we'll see that continue to affect the yield curve. But for now, we don't see a major shift from what we currently have, as we expect that the plans will still remain largely at the short to the medium end of the yield curve. Thanks.
Okay, thank you. Somebody is asking, initial stock, please. What is driving it? Nothing is other than speculation. We haven't really, it's not part of our recommendation, but everybody, what actually played out in the case of Wando, because it's also oil and gas, and people, expectation is that company under oil and gas will continue to do very well because of what we have seen around the global oil price, that companies operating under that sector will benefit from the improved or increase in the price of the crude oil internationally. So that company is being driven by speculation, not by fundamentals, because we haven't really seen any strong corporate action coming from that company. But everybody wants to take advantage of the price of the stock. So there were more demands for the stock in the last 3-4 weeks, but last week we could see that stock was on offer. So we are going to work on it and determine the true valuation, but currently it's not part of our recommendation. You can see some other stock in our recommendation under oil and gas. So that what is driving is just demand outweighs supply, but now there's no liquidity around the stock because everybody wants to sell and there's no demand because it is assumed to be overpriced. Thank you. So thank you very much. We have come to end of the, somebody, I think we can still entertain that question. We have 1 more minute. Okay. Adeomi, please unmute the.
Yeah, good morning. Well done.
Good morning, sir.
Yeah, thank you for teaching us. Yeah. Thank you very much. I just want to let you know that the slides, I don't receive them. Please, how do I go about it to receiving them?
Okay, please, just drop your mail, sir. We'll pick up your mail and then we'll look at it and you'll be getting it, sir.
Where will I drop it?
You can send it to the chat box, sir.
Okay.
Just
thank you.
Mr. Adeomi, my email. So we'll put
this
it.
This is Adeomi, yeah.
Okay, Mr. Adeomi, okay, Mr. Adeomi, thank you, ma. We'll put it in just send the email to the chat box. We'll pick it up from there.
All right.
And you'll get it, sir. Thank you, ma.
Thank you.
Okay, I haven't entertained all the questions. We have come to the end of today's section. We want to thank all our lead investors for taking out your time again to attend this morning program. Thank you very much. We appreciate you and we wish you a lovely and successful week ahead. Good morning, everyone, once again. Bye for now.